Sushant, recently I came across a product where you're covered up until age 99, and I think it was called the whole term insurance. Now, how does that work out?
Right, so that's essentially called a whole life insurance plan. It's a pure term insurance. There's no difference from a traditional term insurance. It's just that here the duration is fixed at 99 or 100 years of age. Some companies have stopped at 99, some have extended till 100.
Well, does this make sense?
Well, not really, right? It's a life insurance that you're essentially buying well beyond the life expectancy. I mean, sure, people do live up until 9900, but how many, right? So, obviously, an insurance company wouldn't factor that in.
Right.
They would simply see it as a plan where it's a guaranteed payout that they have to give. So, I personally even like to call this an investment plan rather than an insurance plan.
How does this compare with the other regular term insurances, right?
So, if I were to talk about the premiums of these plans, let's take a profile. Let's take a 24, 25-year-old who's buying a 1 crore insurance.
Okay.
On one hand, he's opting for a pure vanilla term insurance until the age of 65.
Okay.
And on the other hand, he's opting for a whole life term insurance until the age of 99 or 100.
Okay.
For his pure vanilla term plan, he would pay about 10 to 12,000 per year. Whereas for the whole life plan, his premium would be set at about 28 to 30,000 per year.
Wait, that's quite steep. Then why do people go in for that?
Well, personally, I can't really think of any profile where going for this plan makes sense. I think the only thought process anyone would have before opting for this plan is, look, I want to leave something behind for my dependents.
Exactly.
If I'm buying it till 9900, something will definitely happen by then. And my family will have some money. But if you really think about it or do the math, right? This person was paying 12,000 versus 30,000. What he could have done was continued paying 12,000 and the balance 18,000 per year.
Right.
He could have probably invested that into the bank as a FD or an RD or even started an SIP of his own.
Correct.
And for the same tenure of 40, 50 years, I'm sure any online calculator would tell you how much returns that would make and how better off you are financially.
True.
Two, you also have to look at it this way. You're doing it with the intention that, okay, maybe at 70, at 80, at 90, something will happen and my dependents will get that money.
Correct.
Do you really think they'd be grateful for it, right? You're trying to kind of leave them something behind.
Right.
But think of the value of 1 crore 50, 60 years from now.
It'd
when
be
it's
nothing.
actually needed. Yep. And two, think about the money you're going to pump into this.
Correct.
Over the next 40 years, you could have paid 12,000, but you'll now pay 30,000.
Right.
And then after 65, for as long as you're alive, you'll keep paying for this plan.
Correct.
At the age of 70, 80, for as long as you live, you will keep filling a premium of 30,000 rupees out of your retirement savings.
Are there many options in the market available for this kind of plan?
Not particularly. From what I understand, there are just 2 or 3 brands offering a whole life term insurance.
Okay.
Which is a good thing. I think 10 years ago, there used to be a lot many more companies offering it. But it's good to see the kind of financial awareness spreading where users are realizing, hey, maybe this plan doesn't make sense.
Right.
And I think for that reason, a lot of life insurance companies have withdrawn that option that if it's not selling, why do we still have it in our portfolio?
Makes sense. Well, finally, what does Ditto recommend?
Well, Ditto recommends customizing your term insurance as per your needs.
Okay.
Right, in terms of the duration especially. You could be a 25-year-old who's recently got married and you have some sort of timeline in mind now, right?
Correct.
You can probably think of expanding your family another 2-3 years with kids. Now, max, if I even say that, hey, by the time you're 30, your family is set in place, you could consider buying it even till 60.
Right.
Considering in the future, by then your kids would be at least 30 years old and you'd probably be retired as well.
Correct.
Right, meaning you have no more financial obligations, you've built your own savings corpus and you don't need to provide the security to anyone anymore.
That makes sense.
You could also be a person who's in his mid-30s who hasn't yet started his family. There you take a buffer and go until 65 or 70 just to make sure you've, considered all possible situations.
Makes sense. That's a wrap, folks. And if you have any queries, don't hesitate to reach out to us with the link in the description. Book a free call with one of our trusted advisors. Now, Ditto just not helps you with purchasing a policy, but also comparing different plans. Now we have a rating of 4.9/5 and we're backed by Zerodha. For more financial and insurance related knowledge, don't forget to like, share and subscribe. Happy insurance hunting!